So a charitable donation is a donation of money or property that you give to a qualified charity. Now, a qualified charity, as the name implies, must be approved by the IRS, and it helps small businesses by actually lowering their taxes. You are able to deduct from your adjusted gross income up to a certain amount of that charitable donation, and then that lowers taxable income as a whole. There's two types of donations that you can make to a qualified charity. One is cash. And when you give cash, the only thing that you really need in return is just a letter of contemporaneous acknowledgement, where the charity says, "Thank you so much for your very generous donation. We actually qualify under the IRS rules, Internal Revenue Code Section 501c3, as a public charity, so this is deductible." The other one is when you are gifting or when you are contributing property to a qualified charity. Now, depending on the value of the property, the fair market value of the property that you're contributing, you may need a qualified appraisal in order to be able to deduct that from taxes. The little caveat here is the related use requirement. So you cannot gift to a qualified charity property that they are not going to use in the fulfillment of its mission. The previous law is undergoing some changes because of the One Big Beautiful Bill, but essentially you are capped when you are donating to a public charity. You are capped at 60% of AGI, which is your adjusted gross income. So imagine that you have adjusted gross income of $100,000 and you donate to your favorite church $50,000. Well, 60% of 100,000 AGI is 60,000. Your donation of 50 falls under 60,000, so you're able to fully deduct the 50,000 as an itemized deduction, which we'll talk about later. The other one is, let's say that you have AGI of 100,000, you donate 70,000. 60% of the 100,000 AGI is 60, but you donated above that threshold by an additional 10,000. This can be carried forward into future years. So the standard deduction for single individuals who are filing income taxes is $15,750 in 2025, whereas married and filing jointly is double that, $31,500, for example. Now that's the standard deduction. Standard just changes based on your filing status. The itemized deduction, you group together some qualified expenses that you had in the year. And if the itemization or the listing of these qualified deductions goes above the standard amount, then you go with this itemized deduction because that's more beneficial. Every time your itemized deductions go above the standard deduction, it's in your best interest to use the itemized deduction, because if it goes above $1, that's going to be tax savings at your marginal tax rate. I know taxes are complicated. Standard, itemized deductions, what qualifies as a qualified charity, what qualifies as a charitable donation. If you have those questions and more, just give us a comment below, and then we'll send you a free booklet.